Start. Let's start. In the previous session, we finished off, I think, 71st question. Sensitivity, na? Let's put down the heading as scenario analysis. Let's put down the heading as scenario analysis. In scenario analysis, we'll make some cases. For example, you might have done in your junior classes maybe. So scenario analysis. In the scenario analysis, what you'll do is you'll make 3 cases are there. So best case, what answer comes? For example, best case, you can have middle case, you can have best, middle, and worst case scenarios. So what would be the outcome if best case happens? This would be more or similar to the path approach only, what you would have done. So what is the best case, middle case, and the worst case scenarios you can have? So 3 possible scenarios will make it. Question number 39. Read once quickly, please. Question number 39. Question 39 tells you it says question 39, best case, worst case, middle case. XY Limited under its consideration a project with initial investment of 1 lakh, 3 probable cash inflow scenarios with their probabilities of occurrence have been estimated. 20,000 inflow, 10% chance, 30,000 inflow, 70, 40,000 inflow, 20% chance. Project life is 5 years and the desired rate of return is 20%. Estimated terminal value for the project assets under 3 probability alternatives respectively are 0, 20, and 30. Find the probable NPV. It means in the first year you learn 20 or 30 or 40, and chances are 10, 70, and 20. Find the probable NPV. First case would not be a challenge. Actually, third case is the reason for which I'll be discussing with you. First case is simply find out what NPV. So if I find out the NPV, so how do I find the NPV? The way of finding NPV is straightforward. How much is the discount rate? 20%. So if you look at this part here, what we do is we make our cases here. Year NPV is year 1 to 5, 20, 30, 40, 10% chance, 70, 20% chance. Fifth year 0, 20, 30, 10, 70, 20 chance. Probable cash flows, present value factor at the rate 20, and this will give us what, sir? This will give us 31,000. Annuity factor for how many years? 5 years. and this will give me 20,000.402, and I can find my NPV. Complete the first part, please. Done. The first part looks normal to you, very normal. It will look very normal. Second part also would be very normal. Third part would be slightly which I need to discuss with you. And if you say, I'll discuss one more question from my notes. Once you've done the first part, let me know. Question number 39 we are discussing. It's a scenario analysis we moved into. Can I check the second part? Second says you have to find what? In fact, you find now. Find the worst case NPV and the best case NPV. You tell me which route. Find the best case NPV and worst case. Best case would be what? Happening of 40 and 30, the salvage value. And worst case would be 20 in this. So if I try to look at the second part, worst case would be, sir, its worst case is 20,000 happening for how many years? 5 years. And then we have zero salvage value in the 5th year. Zero salvage value in the 5th year, which happens in. And best case would be happening of what? 40,000 and 30,000. So I have the, once you do the worst case, let me know. Best case I'll show you. Then next part I'll give you independently, in which there will be some additional point. The points which I expect Institute to give you in going forward, maybe as a part of MCQs. Anyone who has done the best case? How much answer we are getting? 30? 31,700 best case. Best case, what is it? Best case is 31,700. Is fine. Last part, let's read further. It does not require anything, but the wordings were very important. State the probability of occurrence of the worst case if the cash flows are perfectly positively correlated over a time. Perfect positive correlation means +1. That means if worst case happens once, for example, actually what happens is in the first year you have what? These three scenarios. That means either you can have worst case, you can have middle case, or you can have what? Best case. Now when we say the cash flows are dependent perfect, it means only first year is the probability, after that it's a confirmation. For example, it's only a probability which college you will enter, after that will become engineer for sure. That is exactly a perfectly dependent events. It means if this happens, then this would be the route for the next 5 years. Understand what I'm saying? First case is a probability 20, then it's a confirmation 111. Sir, if it was independent, then what would have happened in independent was that first three chances, then every case will have 3 3 3 3 3, everyone will have 3 3 3. Independent is point 0.1 into point 0.1 into point 0.1 into point 0.1 into point 0.1. Perfectly dependent is first is 0.1, after that it is 1. That means it's 0.1 into 1 to the power 4. That becomes, that means 10% chance. Perfectly positively correlated over a time. First time it happening dependent, after that it's a confirmed case. Now once you've done this, then I would expect you to try, you do not have this book with you, try question number 40 please completely. One by one I'll keep discussing the answer with you. It has two additional parts which we'll discuss. If you have done this, please, it's 0.1 into 1 to the power 4, then perfectly dependent. The next question will have an independent also. Try 40th. In this first part is same, expected NPV. It's 4 lakh, 5 lakh, exactly same way what you've done. Second part also should be in the same way. Third part we'll discuss. So first part is nothing but you will make your structure. Just once you do it, let me know. I'll keep showing you the answer. Reason of covering this question is fifth part actually, which I'm expecting in exam he'll ask you. Sir, first part, what does it mean? Actually, if you look at the question, it's exactly same. It says net cash flows probabilities are given. How do we read, sir? Probability 30% chance, initial investment 1 lakh, cash flows 1 lakh every year. Investment is every year 4 lakh only. It's a 4 lakh 0 period. 50% chance, 1 lakh 10,000, 20% chance, 1 lakh 20, and salvage value either 20,000, 50,000 or 60. And you have how much, sir, projected cost? 10 percentage NPV of the project. So if logically you try, find out the annuity of the 10%, 3.791. Verbally let's try 3.791. You can multiply 1 lakh into 0.3, 1 lakh 10,000 into 0.5, 1 lakh 20,000 into 0.2. You can get expected cash flow, na? By 1 lakh, 1 lakh 10 and 1 lakh 20 into probability, you'll get probable cash flow. That probable cash flow will come for how many years? 5 years. 3 point, what is that? 791. And then you can have the salvage value. That will be only 5th year factor. So basically, what we'll get, sir? Should I look at the answer? It's 40th first part. If I look at, I'll get this answer, 40th first part. So I have cash flows 1, 110, 120, chances 109, 3.791, chances 43.621. I'll get NP with this. I'll get NP with this. Once you've done this part, let me know. It's a normal NPV what we have calculated. Second part, I think he is asking something, the best case and the worst case. You're very confirmed now. Best case NPV would be 1 lakh 20 and combination of 60. Worst case would be combination of 1 lakh and 20,000. So once you calculate the second also, I'll show you both of them together then. These two parts were exactly same as the previous question. These two parts were exactly same as the previous question. Second and third case also I'll show you. Best case and the worst case. Best case would be, sir, present value of cash inflow 1,20,000 into 3.791, 16.621, 92 180. Worst case minus 8480. We are same track, everyone. Now let me show you the third part in third A and B. Let me show you the third part in third A and B. Can I move? Now it says third part. In third part it says the probability of occurrence, the probability of occurrence, the probability of occurrence of the worst case if the cash flows are perfectly dependent over time, independent over time. Independent means first year happening, second year happening, third year happening, fourth year, fifth year happening are not dependent. And dependent means once it happens, then every time same thing will happen. Worst case, what is the probability? 0.3. That means first time 0.3 if it is perfectly dependent into 1 to the power 4. If it is independent, 0.3 into 0.3 into 0.3 into 0.3. So we have, this is something which you can ask in the MCQ also. A very small, actually this probability would be very small independent. It's as good as you toss a coin, again toss a coin or dice, coming of 6, coming of 6, coming of 6 every time. It's 1 6 into 1 6 into 1 6. So we have probability of occurrence of worst case if cash flows are perfectly dependent is 0.30. If they are independent, it's 0.3 to the power 5. It's 0.3 to the power 5. Perfectly dependent and independent. Dependent means the relationship is 1. 30%. It's not 0.3, it's 30%. It's either 0.3 or 30%. Now, can I look at the next part? Next part was also important. It will test your skills of the portfolio. Find, we did from here. It's actually find the standard deviation coefficient of variation. Assume there are only 3 streams of cash flows which are represented by each column of the table with the given probabilities. Sir, what does it mean? Basically, when you calculate standard deviation, you need what? Return x value, na? He says there could be only 3 values of x. It could be either a happening of 1 lakh or happening of 1,10,000 combo or 120. So basically 3 NPVs you have to calculate, expected NPVs, which will have probability of what? 30, 50 and 20. Interesting part is best case and worst case you have already calculated. Left is what? Middle case. So once you calculate that middle case NPV, you get 3x values. And then you write what? The worst case x value probability is 30%. Middle case whatever value comes probability is 50%. The best case you have already calculated, I think something 92 something now, and probability is what? 20%. So look at the language. There are only 3 streams of cash flows which are represented by each column of the table with the given probabilities. It means either this will happen or this will happen or third will happen. So 3x values you have to calculate. What we just now calculated was, we calculated the best case NPV, we calculated the worst case NPV. These 2 numbers you already have. If someone does not have, you can write 92,180 minus 8480. We'll calculate, sir, what now? Worst middle case NPV. Middle case is 1,10,000 into 3.791 plus 50,000 into 0.621, and we'll get NPV as what? 48,060. So 3x values will become what, sir? Values will become is 92,180 best case minus 8480, and this, and now this becomes what value? This becomes my x value, and then I find what? Standard deviation and COV. My objective was not standard deviation and COV. Objective is using this next statement is very interesting. So this can give you a very interesting MCQ. In fact, if he wants, he can give you a very interesting MCQ in the last part. Standard deviation. Standard deviation cases worst, middle, best. This already you calculated. This you can calculate, and then when you calculate, I think your standard deviation should come. Please do check the calculation instead of copying. And 0.9. This is actually a practice of the portfolio. Quickly do it, please. its cases worst, middle and best, probabilities, NPVs you have, and then you can calculate the COV. Then you calculate COV. Let me know once you've done this. Then I'll show you the fifth part. And you know what is your X bar is coming as 922. This should be same as, actually what have you done? You've calculated 3 NPV. You've calculated 3 expected NPVs, 8480, this, and then multiply by probability. This should be same as the first part answer. Whether you calculate the expected NPV using this route, or you calculate 3 NPVs and then multiply with them what? Probability. So mathematically they will become same. So if by chance you are checking in the exam, this could be a cross check. Either you, if by chance you are making a mistake in either of the point, you will come to know. So either you calculate this way, or you calculate 3 roots and then multiply by the probability. Your answer would be same. This should be 39922. Although mathematical calculations would be slightly lengthier, that you cannot help it out. They are slightly lengthier. Now look at the fifth part and read the fifth part very carefully. In fact, before I read the fifth part, you tell me, higher COV is higher risk or lower risk? Higher COV is what? Is higher risk. You know why higher risk? Higher COV, because risk is in the numerator, na? Standard deviation. Higher risk would be there. And if risk is higher, the RADR should be what? Higher. I think we have discussed in the previous class, and in fact one of the questions he mentioned COVs and then RADR. Now let me read out the fifth point. This could be given interesting point in a small case studies. You can have this question would be there in your study material also. I am not able to recollect which question is this. So maybe when you go back, no need to worry, you can find in the study material also this question, or maybe RTP. Fifth part, I am saying coefficient of variation of X limited on its average project, which is in the range of 0.95:1. Generally it remains in 0.95:1. That means X limited is the company which we are doing the evaluation for. If coefficient of variation of the project is found to be less riskier than average, so R was coming 0.9, 100 basis points are deducted from the company's cost of capital. That means what we'll do, new cost of capital would be what? What we have done as of now, 10. And I think our COV was 0.9. That means we will do the discounting at what rate? 9%. Means your cost of capital will reduce. Lower the risk, lower will be the discount rate. So you can just put down a point, and rest you can do the calculation at home. You can just slightly put down the point. Since the COV of this project since the COV of this project since the COV of this project is 0.9, which is less than average COV, which is less than average COV, 0.95 to 1. In bracket you can put down 0.95 to 1. Since the COV this project is 0.9, which is less than the average COV, bracket is 0.95 to 1, comma, hence 100 basis points would be deducted, comma, hence 100 basis points would be deducted from the cost of capital. 100 basis point would be deducted from the cost of capital. Next line. Therefore, new cost of capital. Therefore, new cost of capital is equal to 10 percentage minus new cost of capital would be equal to 10 percentage minus what? 1 percentage is equal to 9 percentage, and this is what it comes at, 9 percentage. This was scenario analysis. Done. Now let me go back to the inflation topic which we have done. If you want to recollect, recall back or revise back, you can do your working inflation. We had inflation concept of real cash flows will be discounted by real rate, nominal cash flow will be discounted by nominal rate. So real versus real and nominal versus nominal. Let's look at, read question number, I think you will have in inflation. So we are not redoing the discussion, we have ample discussion being done. 42. Read question number 42 once, please. Read question number 42. AB Limited has capital expenditure. In case someone has missed out, we have done the ample discussion of inflation in the chapter International Capital Budgeting. We have done few questions also there. AB Limited has a capital expenditure in hand of rupees 20,000. Expenditure is to be incurred in 2 equal installments. First in the beginning of first year and second in the beginning of second year. Now he is saying 20,000 would be 0 period and first year. Whatever is happening in first year has to be adjusted with the time value of money plus something else if required. Life of project is 3 years. Now the wording starts. Terminal value 4,000 at current price. That means standing at, terminal value is at the end of the year, but it is standing at what level? 0 period. It means it's real. Anything which is standing today would be real. That means inflation is not included. Annual revenue cash inflows 25,000 in real terms for 3 years. Annual cash outflows rupees 18,000 in year 1 and 19,000 per annum thereafter at year 1 prices. Sir, now what does it mean? That means 25,000 rupees revenue was 0 period. If you have to move it 1 year, you have to add 1 year inflation. If you have to move 2 year, add 2 year inflation. If you have to move 3 year, add 3 year inflation. Cash outflow 18,000 in year 1. That means already included how many year inflation? 1 year. 19,000 per annum. Look at this word. And 19,000 per annum thereafter at year 1 prices. It means 19,000 is the expenditure of second and third, but it is standing at year 1. It means if I have to shift to second and third, you have to add inflation of 1 year and 2 years. So that means 18 already includes the inflation. 19,000 does not include the inflation. It includes inflation of only 1 year. So second year if you have to shift and third year you have to shift, you have to accordingly make the changes. Inflation rate is 8% per annum for all cash inflows. That means whatever cash inflows are there, it will be inflation is 8. As regards revenue cash outflows, inflation is 10. So two type of, that means inflows will have different inflation, outflows will have different inflation. Money cost of capital is 18%. It means you can discount your cash flows only by what rate? 18. So discounting rate will be money. Money terms means nominal. It means all cash flows has to be converted to the nominal. Advice as to the viability of the projects. Now what will do? Keep in the question, do not shift to the answer please. Stay in the question only. If you look at, stay in the answer question only please. We had expenditure. He said expenditure was something standing 0 and something at the end of 1 year. Terminal value was standing in what year? At current price, real terms. Do not shift to the answer, please. Keep in the question. Answer is with you only. How many years inflation I'll add to convert into money? 3 years. And terminal value is the inflow value, outflow value? Inflow. Inflow would be added how many? What rate inflation? 8%. 8% for 3 years. It will become money term. Then look at the revenue. Revenue was standing in what period? 25,000, 25,000, 25,000. If you add 1 year inflation, it will become 1 year revenue. Sir, why are we converting in money terms? Can't we do in real? We cannot do, because discount rate is given in the money terms. It has to be solved in the money terms. 25,000, how many year inflation? 2 years. And then 25,000, how many year inflation? 3 years. Outflow 18,000 was already standing after what? 1 year. 19,000 is said. I have made diagrammatically for certain reasons so that you understand. 19,000 is standing in the first year figures, but it belongs to the second and third year. It means add 1 year and add 2 years. I hope you are getting my point. Revenue was all standing in 0 period. So respectively 1 year, 2 year, 3 year. Terminal value was standing in 0 period, 3 years. In outflow 18,000 was standing there only. 19,000 was standing here. 19,000 was standing here. Respectively add 1 year and 2 years. Is it fine? And then you can make revenue minus outflow, and terminal value here comes total cash flow 18% PV of a cash flow, and this becomes PV of cash flow. 10,000 was standing in 0 period. This, look up this, and this was standing after how many years? 1 year. Sir, how do you know this is money or real? If nothing is, for example, when you go to anywhere and if they do not specify anything, they never say. Actually, practical language we never use this includes inflation, or bank will tell you, oh, this EMI is including inflation or excluding. They never use this word. Whatever amount they tell you, it already includes what? Inflation. If nothing is said, that means this 10,000 already was in money term. You discount by what factor? 0.847. Sir, once again, whatever is standing in the real term, convert to the nominal term. Revenues and outflows and terminal value, then calculate your inflow minus the outflow. Outflow 10,000 is as it is, 0 period, nothing is the impact of the inflation. It is standing in 0, and it is standing in 0 because the present value of all cash flows comes back to the 0 period. And this 10,000, when you discount by 0.847, it also comes back to the 0 period. Quickly check the answer, then I'll give you one question from my side to do it, which could be expected in exam. Just quickly do it, please. Done. Now, can I move to one question from my side? I think I might not have given to you in your notes. So let me test you on that. I'll just show you the question. So I think should be an example in my book. Look at this example, please. If anyone has the books, it's okay. It's on page 13.9 or maybe the respective notes. Look at the example. Answer is given in one form, but I'll expect you to write the answer nicely, please. XYZ Limited requires 8 lakh for a unit, useful life 4 years, salvage value nil, depreciation charge 2 lakh per annum, expected revenues and cost excluding depreciation and ignoring inflation. That means all these figures are given in what term? Real term. Tax rate 60, cost of capital 10. Calculate the NPV of the project if inflation for revenue and cost are as under. Now look at the data here. First year inflation of the revenue is what? 10. Second year inflation of the revenue 9. It does not mean that second year would be into 1.09 into 1.09. First year would be 10 percentage, then would be 9 percentage, then third year would be 10 percentage of first year, 9 percentage of second year, 8% of third year, and fourth would be what? 10, 9, 8 and 7. Similarly, the cost would be included. Similarly, the cost. So I'll get revenue, cost, and I'll get the data for the CFAT. So what I do is I'll just show you one graphical presentation. I'll show you the question. I'll not show you the answer, please. Answer I expect. I'll give you 5 minutes and then I'll keep showing you the answer. For example, if I'm standing in 0, it will be 1.1 into 660. 7 lakh would be 10 percentage of first, 9 of second, 8 lakh, 10, 9 and 8. 8 lakh would be 10, 9, 8 and 7. Similar exercise I do for what? Cost. And then when I make my what? CFAT NPV calculation, revenue minus cost minus depreciation. Depreciation will not get impacted by the inflation. Depreciation is on what cost? Historical. So depreciation is on a historical cost. So it will be 2 lakh, 2 lakh, 2 lakh. PBT, tax, PAT, add depreciation, get what? CFAT, and then you can calculate my NPV. I'm showing you the exact question. Whether you want to do rough work, you do it. Fair part I'll show you, but I need the answer from you. I'll not even show the below answer to you. Calculate for me quickly the answer, please. Calculate for me the answers quickly. So you will have to calculate the revenue. That means, sir, what we'll do once again, 6 lakh plus 10 percentage, 7 lakh would be 10 and 9, 8 lakh would be 10, 9, 8, and 8 lakh would be 10, 9, 8 and 7. Similarly for cost, and then you have a revenue minus cost minus depreciation, PBT minus tax, PAT, add back depreciation, CFAT, multiply by 10% factor. Sir, this is including inflation, nothing is said. We have to use the using this money only, otherwise there was no sense of giving the inflation concept here. So quickly calculate for me the answer. If you want to do in rough, do in rough. If you want to do fair, do fair, and then I'll show you my answer, please. 5 minutes I give it to you. Quickly try that out. I just need the numbers from you. Once you've done, let me know. I'll start showing you the answer then. Let me know once you've done. Done. Let me at least numbers you would have copied. Let me show you the revenue part. Revenue, this is what I'm getting. You can cross check your revenue numbers if you want. Hmm? Then cost numbers. These are my cost numbers. 3,36,000, 4,92,800, 537, 152, 580, 124. Hmm? Then I'll show you the CFAT, calculation of NPV. This is what exactly I'm getting. Although in the book also answer was given, but that was multiplied, discounted at one go only. So this could be the perfect way. First calculate the revenues, cost. This question will remain important for the exam, please. This will be a cost, revenue, depreciation, PBT, tax, PAT, add back depreciation, CFAT, present value factors. Fine. Inflation will remain important from this chapter plus from the AFM. So this remains one of the very important. We can link in any two combinations, whatever the case may be. So that was revenue calculation, cost minus depreciation PBT, the less tax PAT, add back depreciation and then multiply by the present value factors. You will PV of cash inflow minus outflow. Fine. This was inflation. Now moving to another important topic which Institute has been asking a lot on replacement cycle, optimal replacement cycle. I'll do this as in fact let us do a very general exercise first if you want. We have, before I move to the replacement cycle, I think 74 question is there in your notes. I have given 73. Yes. 73 is a general question, general replacement question. This can be done very easily. So just look at the 71 3 question please. It's a general question. I'll read out with you. When you go back home you can do it completely. After that I'll move to the replacement, optimal replacement cycle. That is something technical in nature. This is not technical. This I could have given you as homework in fact. 73rd question, normal replacement. A company has old machine having book value 0 which can be sold for 50,000. The company is thinking to choose from one of the following two alternatives. So old machine has to be replaced with any of the following two. Incur additional cost of 10,000 to upgrade the old machine. That's one option they have. Second option is replace the old machine with new machine costing 20 lakh plus installation. So generally what we do is old and new, we take a decision. This is old, then we have old plus upgradation, old versus new. So two combinations we have got basically. Both our proposal envisage useful life of 5 years with salvage value nil, expected after tax profits. It's PAT. Expected after tax profits from the above three alternatives. Old machine are standing this, upgraded machine and new machine. Interesting part is old machine has book value what? 0. If book value is 0, depreciation is 0. If depreciation is 0, PAT is as good as what? CFAT for old machine. Sir, can we recollect these steps? What were incremental steps? Incremental was basically what will happen? You will compare old and upgraded, old and new. Two have to be compared. Now these are given 40% tax bracket, straight line method depreciation. Sir, you said depreciation 0, then why he is giving depreciation for the additional? If upgradation something happens, for example, if upgradation happens, how much life is saying? 5 years. So this 10 lakh will be for how many years? 5 years. So we'll have basically what? If you look at 2 lakh additional depreciation, and second one how much? Not 4 lakh please. Installation cost, anything which is incurred should be capitalized. I'm not going into accountancy concept, but anything which is incurred when you buy something, it is a capitalized. So you'll have 20 lakh plus what? 50,000 divided by what? 5. 4 lakh 10,000. Now when I look at 0 period, since you have the question in the book also, answer is given to you. If the machine is upgraded, upgradation cost is 10 lakh. In case new machine installed, cost 20, installation cost 50 and 20 lakh 50. Disposal of old machine. Sir, this is happening in which case? Where did he say disposal of old machine? Disposal of old machine. Disposal will take place only when you replace it with what? New machine. If you upgrade, then it is not a disposal. That means if you less. Sir, why he has subtracted tax 40%? Book value was 0. Tax, please be careful in the exam. Tax is not applied on sale. Tax will be only be applied when your book value is 0 and there is a capital gain. Let's suppose it would have had a book value Then you look at book value and market value, and accordingly you take a call. Since this book value was 0, in the first part he said book value is what? 0. If the book value is 0 and you're selling for what? 50,000, it will be liable for tax 40%. So basically upgradation will have 10 lakh cost. The new would be 2050 minus 30 inflow after tax 20 lakh 20,000. This is your costing initial incremental, you can say initial cost. Now we'll compare what, sir? We'll compare if we move from the old, we'll compare old and upgradation. Compare old and upgradation. Before I go to the upgradation, in the old machine, this is PAT also and this is CFAT also, because book value was 0, depreciation was 0. This is what? PAT, after tax profit. This is what? PAT. I'll add back what here? Depreciation. I'll get what? CFAT. Let's verbally do one. 5 lakh 50 plus 2 lakh how much? 7 lakh 50. So if I ask you between upgradation and old, how much is incremental CFAT first year? Sir, once again, 5 lakh 50 plus 2 lakh depreciation, it's 7 lakh 50 and minus 5 lakh, how much incremental? 2 lakh 50. Similarly, you can do generally one thing, 590 minus 540, add back depreciation, 610 minus 580 plus depreciation. Can you get the incremental? Yes. Similarly, can you compare these and these also? In this case, when you will convert from the PAT level, you will add what? Depreciation. So let me show you the answer. It was general question, in fact. So old machine, EAT and CFAT are these. New machine is CFAT this. So how did we get this CFAT? EAT is earning after tax plus what? Depreciation. And then how do we get, sir, this 250? 750 minus 5 lakh, 790 minus 540, 810 minus 580, we get incremental CFAT. This CFAT will come when we are doing upgradation. If we are replacing, then what is our CFAT, sir? If we are replacing, then basically our CFAT would be, it's EAT plus 410, 1010. So, 1010, 6 lakh is the earning after tax, na? So, 10 lakh 10,000 minus what? 5 lakh. You have to compare the new with the old. 510. 10 lakh 50 minus what? 5 lakh 40. 11 lakh minus what? 5 lakh 80. 11 lakh 50 minus what? 6 lakh 20. Can you get that? And then you are expert at incremental CFAT in upgraded new machine. Cost you know 10 lakh and 20 lakh 20,000. 2020 came na? 2020. Can you try as homework? This was normal replacement, but since first time if you look at these type of question, there could be challenge that how to do. Nothing to be done. Generally we do is old and new. In this old, upgradation, old and new. So you have to do accordingly. Now we have question number 75. This I'll ask you to do on your own. I'll show you one from my side on optimal replacement. And why that becomes important, sir? That becomes important is because over the years institute has been altering the answers a lot of time. Now when I was looking at the data, to somehow they've tried to keep the format same, and I hope they keep the answer same. So the best possible answer what can be done in this is what we are doing. Although these are decision making questions, n number of ways could be found out. So do not now twist and try. When you go back home, you can open up your study materials, you'll get exactly the same parameters. I'll read a question from my side once. 74, which is not, you are not having. 75 I gave, I thought I'll discuss with you, but let me do one another type of question with you. 74, I'll just show you the question once. Those of you have the books, it's okay, or if someone is doing from the revision perspective, what you can do is you can take photo of this question once. So you will have, if you have, that's fine. Otherwise just take a photo of this question. Very important question. Means if you'll make a mistake, I am 99% sure you'll tend to make a mistake in these type of questions only. In these type of questions only, you'll make a mistake. And confusing answers were given, but at least now by looking at 74, 75, we are almost on the right track. That can be done. Can I read the question once? Let me read. A question is not tough. Its question is data wise is simple, but the way of doing could be challenging. It will involve a concept of equated annual concept, EAC approach. A machine used on a production line must be replaced every 4 years. Cost incurred to run the machine according to its are as follows. Age of machine, that means if you buy 0 period, first year maintenance. If you sell the machine after 1 year, first try to read the box. If you run for 1 year, maintenance 16 and scrap value say 32. If you run for 2 years, buy in 0 period, 16,000 maintenance will come, then 18,000, then repair of 4 and sold for what? 24. That means as you go forward, maintenance will happen for first year also, second, third and fourth. But salvage value will come only once, whichever year you are selling. For example, let's suppose we run for 4 years, 60,000. Then you do what? 16, 18 plus 4, 20 plus 8, 20 plus 16, and then you sell for what? 8,000. Future replacement will be identical, will be with identical machine with same cost. Revenue is unaffected. So revenue we are not taking into account. It's only cost. Objective is decision making. Objective is not the amount. Objective is decision making, and there could be multiple ways of doing it. Of the machine, ignoring inflation tax, determine the optimal replacement cycle. Highlight this word, please. Optimum replacement cycle, a very important term. That means when to replace. Basically, should we run the machine for 1 year and then replace? Should we run the machine for 2 years and then replace? Should we run the machine for 3 years then replace? Or should we run the machine for 4 years and 1 replace? The problem comes is, if for example, if I buy today, run for 1 year, some costing will come. Because this involves only cost data. If I buy today, run for 2 years, 2-year cost will come. If I buy today, run for 3 years, 3-year cost will come. I cannot compare 1 year cost with 2 year with 3 years. I have to calculate on an average every year how much is the cost. On an average every year how much is the cost. For example, if I run for 3 years, equated cost every year. If I run for 2 years, equated cost every year. If I run for every year, equated cost for every year. So equated cost of 0 period also? Yes. Because what happens is, when I stand here, I say I run machine only for 1 year. 2 years, let's suppose. If I run machine, I want to find cost every year. If I run machine, I want to find cost for 3 years. Every year cost. 4 years, every year cost. And when my 0 period value comes, that 0 period value I have to see and stand here. That means I have to compare. If I run for 1 year, this cost is average cost of 2 years. This cost is average cost of 3 years. This cost is average cost of 4 years. It is nothing but equated annual concept I will be using. Do not worry on that front, which you have done already. Basically, what we do is the equated annual concept, which was your basic questions of the capital budgeting in Inter. What you to do was, if you know these 4 amounts, can you calculate the 0 period value? Your present value is equal to what? Equated annual amount into what? Annuity factor. This is what you do. And if I want this amount, then it will be what? Present value by annuity. You have been doing unequal life concept now. This is exactly on the same front of unequal life. Before I move, let me first calculate the costing every year in 2 years. That means first let me find cash flows of if I run for 1 year, cash flows if I run for 2 years, cash flows if I run for 3 years. Just help me out. Let's suppose if I run for 1 year, 60,000 outflow. I'm just writing here. You do not write. I'll show you the answer, please. 60,000 outflow, 16 outflow and 32 inflow. 16 outflow, net inflow would be 16,000 inflow. Now there is a problem here. This will happen after what? 1 year, and this is happening what? 0. Just keep in mind that. Let me do one more and then we'll come back. How do we convert equated? If let's suppose we run for 2 years, how much is my outflow? 60,000 outflow. That will happen in 0 period. Then this 16,000 will take place in which year? first year. This 18 plus 4 will take place in what? Second year. How much? 22. And then I'll have 24 as what? Inflow. So what you can do is the outflow, 18 plus 4 outflow, 24 inflow. So you'll say, sir, 16,000 would be again a outflow, but that will be 1 year. And 18 plus 4, 22 minus 24, 2,000 inflow after how many years? 2 years. Is it fine? If I ask you bring back to 0 period, you can bring back now? Yes, no doubt, sir. If let's suppose we run for 3 years, 60,000, 16,000, 18 plus 4, then 20 plus 8 minus what? 16. How much? 12,000. I hope you can calculate these costing. Can you calculate for every 4? Yes. So roughly you have told me. Let me show you the answer, because generally I discuss this with them. This was question number 74. Na? Don't worry, 75 I'll ask you to do the same way, because answer is not given very nicely. Answer you can calculate, but I just want to show you what best you can do and easiest way to do it. Look up please. Now for example, solution 74 we had replacement cost 60, 16, you said 60 and 16. This was only the cash flows. Then second year cash flow, you said what? If we have a 2-year replacement cycle, 60, you said 60,000, 16,000 and 2,000 was inflow. Then if I have a third year, what will happen? Third year will be, sir, what? Third year was basically 6, because first what is happening in the beginning, first and second, that will come as it is. That will come as it is. New addition will come what? 18, 28 minus 16. Similarly, can we do for fourth? If by chance you have taken the photo, you just check the numbers. 16,000 of first year, 22,000, sir, it is including what? Maintenance, repairs I have combined here, plus 28,000 repair maintenance, plus 30 repair maintenance, minus 8 will be, last year would be 28. Exactly same thing we are getting, exactly same. Now I cannot compare 1, 2, 3, 4, because first is only 1 year, second 2 year, 3 year, 4 year. Even if it was accountancy, na, it was no time value of money, I could have calculated simple averages. When you divide na, equated annual cost, you are actually calculating average only. Tell me what happens when I say 4-year data, 1, 2, 3, 4. Tell me the accounting average. You divide by what? 4. In financial management, 1 is not 1. It's 0.909, 0.826, 0.751, and 0.681 or 6, whatever it comes. When you add all of them, you are actually calculating an average only. Understand? Present value annuity factor is nothing but sum of the present value factors. In accountancy, it is 1, 1, 1, 1. In FM, it is not 1. It becomes the normal. So we are calculating average only. What we do in this case, look at this chart, is very, very important, please. Look at this. Look at this. I'll give you the time to copy, don't worry, or to take a screenshot. Just look at my answer. This I did not want to cover, but I thought that we'll cover 2 questions. It will give you a good hand. Now look up please how this is created. It says, if 1 year I run, I have taken present value factors because they are consistent, and I think 4 decimal question has given it. It's not I have taken it, question has given it. 60,000, 16,000 inflow, we calculate present value. This is present value. How did we calculate, sir? 16,000 into this, it gives. Now second year what we had? 60, 60, 60 will remain always 60. First year 16, when you multiply 0.8696 into 16, you get 13,914. This is outflow and there is difference. This was inflow. This was inflow. Why? Because salvage value came. And then 2000 is because of that inflow. 2000 into what? 0.7561. It's an inflow which comes. Now similarly I can do for third. Sir, what are we doing? Whatever we got here, na, it's 1 year factor, second year factor, third year factor. This will be 1 year factor, second year, third year and fourth year factor. So when I multiply, because I have taken the factors as one place, and then it becomes easier to multiply. I get, if I run for 1 year, this is what it comes. Minus, it's a minus actually. By chance it is coming here. Minus, minus and minus. These are the costing which comes out. Revenue he has not given. If revenue was given, we could have calculated the inflows. We want to check, we'll select that cycle period or that period in which our cost would be what? Least. Now this is happening, if you look at this cost, when you multiply this into present value factor, this you are arriving at what time period? Zero time period. It's zero time period. Everything, when you multiply present value factor, you are coming at what time period? Zero. This is also arriving at what? Zero. This is also arriving at what? Zero. This is also arriving at what? Zero. Let's come to the 4 years. You have done so many equated annual concept question. You know what the question is to do? If machine is run for 2 years, one machine is economical, will run for 3 years, and then you used to calculate. Let me show you, in fact, if you don't remember. Let me show you once. In fact, let me go to the AFM. There is no choice left with me. Let me show you the type of questions. This is capital budgeting, na? If you recall back your junior classes, these type of questions were very common with you, in which one machine has a life of 3 years, 2 years, initial cost, running cost, and you calculate present value of a cash outflow, present value. This cost is for how many years, sir? 3 years. This cost is how many years? 2 years. And when you divide by annuity factor, you get average cost. What was the objective? You were standing here. When you divide by annuity, you get on an average every year. This was favorite question of the Inter FM. And similarly, if this is 7, 1, 12, 390, divide by the annuity factor, you get on an average cost every year. Because you cannot compare a totality. One life is full and one life is smaller. So you used to calculate the average costing. Similarly, the question what we are doing now, in that question what happens is, this cost is for how many years? Last one, 4 years. If I want to find average, had it been accountancy, I'll divide simply by what? 4. Although formula wise, you know, present value is nothing but equated annual installment into annuity factor. If I want that equated annual installment, it will be present value divided by annuity. But simply remember, annuity is nothing to calculate. Average we are calculating. Add up all the 4 factors. Add up all 4 factors, please. Add up all 4 factors. Something comes 124,968. 124,968 divided by 2.855. Divide by 2.855. How much do we get? I'm just writing below this 40. That means on an average every year costing would be 43. Sir, how do I read this? That means first year, second year, third year, fourth year. Either you spend 43,772. If you bring back this to 0 period, your present value would be 128. Similarly, 98,438. Add up how many year factors, sir? 3 years. Calculate average cost. 43,114. It means on an average, if we replace every third year, average costing would be 43,114. 2 years, 44,536. First year. Now, actually, most of you will have the doubt. So this is first year only. This is not first year. It's 0 period. It's a 0 period. You have to bring it to what? 1 year. Divide by 0.8696. It is standing at 0 period. If standing at 0, get to 1 year. Divide by 0.8696. How much do we get? 52,997. That means if we replace after 1 year, our average every year costing is 52,000 or 53,000. If we run for 2 years, average costing is 44,500 approximately. If we run for 3 years or replace after 3 years, costing is 43, and after 4, 43,772. So replacement cycle should be what? Every 3 year, 4 year, 2 year, 1 year, 3 years. That is exactly what it comes. Look at this. EAC. Only thing I have taught you here is that how to look at the data. 60,000 first year. Just first task is calculate the cash flows. 2 year running cash flows, 3 year running cash flows, 4 year running cash flows. Bring them to present value. and then divide by the annuity factors, and you get this. EAC is least in case replacement cycle is how many years? 3 years, should be replaced after 3 years. Alternative answers could be done, I am saying, and I wish institute will keep, because now they are at least trying to keep symmetry these type of question. Otherwise, one question done X way, second question done Y way, third question was done Z way. It was difficult for you to recall. Remember, for us to, I mean, the decision, it's a decision making. Now same thing we can do the 75th also similar way, although they have given the answer in different format, but exactly same meaning will come. So before I move forward, since you've taken the photo of the question, if you want, I'll just show you this. You can take a photo of the answer also. Just take till here, then once you've taken, let me know. When you go back home, you can try on your notes on your own, please. And this is important question from the examination pattern. It's an important question from the examination pattern. I'm saying it again. Starting at 0 period, but one is only for 1 year cost and one is for 4 year cost. How can you compare? Nalayak. One is 0 period we are standing, but the problem is costing are for 3 years, 4 years, and so on. Three-year replacement cycle. Is it okay? Just see once. Let me do one thing. Let me enlarge. 2 years you've taken, na? Just take 3 and 4. 3 and 4. Three and 4 done. Now what you can do, I'll show you. Just take this part here, NPV, and then EAC calculation, which I'll show you. You can take, although I've calculated here EAC, but you can do that EAC also. Let me go back. This is EAC, and then we'll do 75th. Read 75th and frame your answer, please. Read 75th and make a framework of your answer. Do not look at the answer, although I can tally the answer from the book also. Do not look at the answer, I can tally the answer from the book also. We'll try to create a similar type of a structure. The objective is again to find cash flows 1 year, 2 year, 3 year. I'll read out the question with you. I'll read out the question with you. Trouble-free Solutions TFS is authorized service center of a reputed domestic air conditioner manufacturing. All complaints and service related to matters of air conditioners are attended by this service center. The service center employs large number of mechanics, each of whom is provided with a motorbike to attend the complaints. Each mechanic travels approximately 40,000 kilometers per annum. TFS decides to continue its policy for always buying a new bike for its mechanic, but wonders whether the present policy of replacing the bike every 3 years is optimal or not. It is of the belief that as the new models are entering into market on a yearly basis, it wishes to consider whether replacement either 1 year or 2 years would be better option than present of 3 year period. The fleet of bike is due for replacement shortly in near future. First paragraph is just building a story. That's nothing else. I don't know bike, which bike they replace, mechanic, they go, This is actually, you know what, your something happens to your bike, something motor car, and then someone will come on the bike and replace. They're planning that the bikes which their agents are using, should we replace them or not. This is a perfect way of making a case studies, means they can make smaller case studies on this. What they can do is exactly same question they'll say, and then they'll ask you first year replacement cycle cash flow, calculate second year replacement cycle cash flow, or third year replacement cycle cash flow, and they'll say, or calculate present value cash flow the first year, second year, third year equated. So this is actually a perfect way of making a story, that why they want to replace, why not. Actually these are service centers which he next time what he'll give, you know, he'll give the example of that comes na, you sit at the back and go rapido, we can make that example also. Rapido na, huh. That example also you can make. Now if you look at this part here, I have taken then period 1, the purchase price of latest model bike is 55,000. Resale value of the bike at the current prices in the market is as follows. If 1 year old, you can sell for what? 35 redemption value. If 2 years, 21, 3 years, 91. Road taxes, comma insurance, etc. Now problem is, if it was, first of all it is given 1 to 3 years. If it was a one time item, he would have mentioned it's basically maybe a insurance. I'm using from that word insurance that every year is done. So it's a recurring cost we have. It's a recurring cost. Although there could be some costing which happens only once in a at the starting. So but since he has given this way, it means every year recurring cost is this. Petrol repair maintenance is anyhow recurring. Now that means is what I have shown here is every year cost would be what. If I run for 1 year, it's a 3,030, 3,035, 38, 3,040, 3,046. Opportunity cost of 10. Optimal replacement period. Highlight this. Optimal. That means first we'll calculate what, sir? Roughly you tell me first before I show you my format. Formats you can make in the exam, and then I'll show theirs also. What does it mean? If for example you buy something 55 today, it's a what? Outflow. Then you'll incur how much cost? 33. In resale value 35, net value 2000. So this is for basically I have shown it here also. So it's into 1 0 period, then 0.909. This is in what term? Present value term, and then divide by what factor? Since 0 period we are standing, annuity is only 0.909 only. Divide by 0.909, you get 58,506. Let's do for second year. Second year would be, sir, 55,000 as it is. First year cost will come 33. Second year would be, I can make 38 minus what? 21. How much? 17. So I'm 2 year cycle I'm saying it is, sir, 55,000. First year costing will come 33,000. Second year costing will come 38 minus this. How much you said? 17,000. And this year is factor 1. This is 0.909. This is 0.826. Total you can tell me what comes. Total you can tell me what comes. 55,000 plus 33,000 to 909 plus 17,000 to 0.826. How much do we get? 99,039. How many years? 2 years. This is what you were asking. He was asking the same thing. This cost was only of 1 year, though they were in 0 period, but it was 1 year. This cost is of how many years? 2 years. Hence you cannot take a decision. Basically you can take a decision when they are of equivalent years. 99,039 divided by the annuity factor. How much do we get? 57083 or 57050, whatever number comes. Is that fine? So let me now check my answers. What I have done is, first part was calculation of what? Since you have the book with you, you can find same thing. We found how much? 55, 33 and 17 na? And third you can check. So what I have done is taxes, insurance, etc., petrol maintenance I have seen, the residual value. One answer is given in your book, that also I'll show you, don't worry. This, if you want to make a format like this or just simply, you can do it. This will help you. Wait, don't take my photo now, like I'm taking a full screen. Take this now. This is one way of doing it. and then you tell me if first year I do 53 183 50 no, 55 2000 into 0.909 no? So you were getting what? 58506, 58506, and then we'll convert present value. Do not make a mistake, first we'll have to convert to them what? Present value. I'll show you that also, or in fact if you want to see that format, please, I've done that format here. This is exactly the similar line. 74th question I've prepared it. Year 0.909, 0.826, 0.751. This is point, and then you can get what? First year value, how much you're getting? 58506. Second year 57083. Third year 57993. It should be replaced after how many years? Every second year. So let me show you the last part, and then we can see the answer from the book also. So this is the last part I have. Exactly same thing answer is given in our notes also, that I have taken from your institute. How they have done is, because first year is a common cost I think, so they automatically take cumulative. That's also one of the ways of doing it. So how do we read this? It means if we replace after 1 year, every year costing would be 58,506. If we replace after 2 years, every year costing would be 57,083, and third year 57,994. This remains one of the very important questions. I'm saying it again, and at least it could be symmetrically framed now. Otherwise, almost every author or every kind of a notes, any kind of a, in fact institute also used to give variety of answers on this. So now we know at least this is there. It is not, in fact if you go back and read, I think there could be 1 or 2 more questions in your study material. When you go back, they would have alternative answers also. Decision making would be same. One could be on this parameter, second could be on different parameter. So learn only the one way of doing it, so that you know optimal replacement cycle has to be done how. Because this is one of the complicated topics can be considered. Now coming back to the answer what we had, if you go back and try to check exactly same thing they've done, it's a shortcut way, that's it. It's a shortcut way. So it's what has been done is, for example, sir, they have taken what? They have taken 33, 38 and 46. This is only the cost. And what they've done is, because this is present value, this is present, this is present. So I think what they would have done is, this will be included here, and these two would be basically included in what? Third. And then separately they have taken, that's it. They have taken the cost one only. What we have done is, we have taken one by one, 55,055, 55. Then they have taken resale values separately. What they have done is, cumulative present values they have calculated, because when you run for 1 year, 1 year cost comes. When you run for 2 year, first and second both comes. When you run for third year, first, second and third comes in. So exactly done. I think your answers would be same. Just check what were you were getting. 58,506, 57,083 and 57,993. That was optimal replacement cycle. That's fine. That was optimal cycle what we had. Sensitivity we are done. This question you can try as a homework. It's a normal, I think, calculation of standard deviation and COV. Yes. So 70 question you can try. 39th we have done. Rest is done. Yes, that's it. We have covered different questions also from the notes. That's it. So this was capital advanced capital budgeting, what we had. In fact, when you go back home today, just open up your study material. You should be able to solve majority of the questions, I think. It could be one or two here and there, otherwise you would be able to, because this would be a general topic which comes generally, or it would be a combination with some other chapter which will come. Inflation will come with the ICB, for example. Sensitivities, in this I say particularly sensitivity is important. RADR, certainty equivalent, these are very straightforward. And the last one what we talk, optimal, that was perfectly from this topic. There could be possibility which comes out, because over the period now this was advanced capital budgeting, and in fact that adjusted NPV we have covered already in the international capital budgeting. Now what has happened is they have increased the course, plus now the 30 marks MCQ coming. We don't know how much questions they'll give it from here. The question, for example, this question also 39, for example, I'm just saying it could make as a case study, and then 20 marks, instead of giving that chapter, 8, 10 marks, 2 case studies can come, this can come. So this could be a possibility. What I have seen kind of case study they give is, for example, one of the case studies which I was watching was for in chapter derivatives we covered. So there could be, this is exactly this different pattern. This is, for example, this question they gave, derivatives I'm talking about, this question they gave, and then they made these as 3 parts. It became a case study for them. So we don't know the pattern, let's always comes, but anyhow they can give anything, whether they'll give small MCQs separately of 10 marks and 10 marks, 2 case studies, or etc. That once we move forward in the exam we'll come to know. Now here we have finished from the normal point of view almost all the chapters. When you go back below these videos, you'll have a link. I've already updated or uploaded these documents. What I'll do is now the case studies or the MCQs which are there, which I'll keep uploading. Plus I'll do any additional theory to be read from your side, that I'll also upload. For example, any theory has to be done, so you can keep looking at that. Just standing here in a week's time, I think everything should be there. When you go back home today only, I'll upload for capital budgeting, forex, some chapters which we have covered, so I'll upload, and after a week's time you can keep watching. So 1 week, 2 weeks, by end of April, since I think exam would be postponed, it's a 99% probability. It's not even tomorrow, I think is a meeting, and by Saturday or Sunday you should have the dates announced, I think so, because tomorrow is a meeting they have, the way it is going. So April, by April end, standing here by April end, in that time just keep watching. There could be a lot of materials updated there, plus whatever MCQs I've taken, if I record them, whatever I've recorded, I'll try to put them in the same video. I'll try to create a playlist. I'll try today, new learning for me, so I'll create that playlist, and with that I'll keep uploading it, so it becomes easier for you. But onus is on you now. I'm expecting 30 marks if nothing is changed, that could be scored easily. I should not say easily, because what they'll ask I don't know. The way the pattern appears, they could ask anything from, let's say, about the technical analysis, which I consider as, maybe if you ask me very frankly, if I'm doing the CA course, technical analysis should be a last resort to me, because I'm not a everyday trader I'm becoming. If I have to become a trader, then why I'm spending time here? Very frankly I'm talking to you, because I know those who are 6th or 7th, or my cousins, those who have not done the graduation, they become technical analysts, because technical analysis is reading of lines, the heartbeats moving up and down. So if you have to ask a 20 marks or 10 marks case study from there, then what is the use of teaching me so much of valuation and balance sheets? It has to be, they have to think it. Since being in a course, it does not mean that you have to give the importance. It's okay, you should know technical analysis. I don't know which kind of a chartered accountant. One side, even the SEBI is saying, do not do trading, do not do FNO, but the derivatives is part of your course. It's okay, that has to be done. Forex is important, M&A valuation is important, bond valuation, etc. is important. There are a number of topics. Being capital budgeting now, so capital budgeting they have a strong hold. Understand please, capital budgeting they have a very strong hold, because this is one of the oldest chapter they can have. So they can create anything, and problem is the numbers, what kind of a case study numbers we have. So that could be done. So what I'll do from my side is I'll update the MCQ, plus if I find some good questions. So along with the answers only I'll upload, because otherwise there is no sense, you will not be able to do. In case I think in class we have covered some question, although I tried in between when we are doing this class, I tried something which I found relevant from the regular class, I have taken it. Going forward, let's suppose I think that some question which maybe during this marathon batch I missed out, which could be relevant, I'll put that video as it is. So I'll cut and put that video as it is. So in this section only, as of now, two folders you'll be able to see, handouts and the questions. Third I'll put today only. When you go back home by, I'll reach back home, I have to go somewhere, so I'll reach back home by 11 I think. So I'll put under that MCQs and case studies, and if videos would be there, I'll put the videos also at least, or I'll put Excel in which from the YouTube I already there, and which I'll tell you, you can go through it. This will help you in this topic, this will help you in this topic. If there is a RTP revision, this is this topic. So just keep watching that video. No need to subscribe to the YouTube channel and keep going and watching there, because it would be cumbersome, because I don't know how many YouTube channels you follow, etc. If you find relevant, it's there. One exercise which I've never tried, but I'll try, if I can put that in this. If it's a RTP discussion, you'll know which RTP. Otherwise I'll try, if I can do, I don't know, if I can do, for example, my book is 78 question, this is question number 40 of your practice manual. So maybe in the Excel I'll put down, so that when you are reading your study material, you know this question I had to refer, so you can check that question out. For example, today what we covered was basically question number 75. Now that question would be there in your study material. Somehow you'll try that whether we have covered, not covered, covered, not covered. When you go back home, at least you can mark these questions. I tried that the questions were taken in such a way which will not trouble you. Optimal replacement cycle was important. There could be one or two more questions in your book which you will be able to do. They have an alternative answer, that's it. So this is important from the perspective. Sensitivity analysis is technical, important, and that scenario analysis, fourth and fifth part which we have done. These are actual capital busting. Inflation was also capital busting. Now since it has clubbed with some other chapter, it becomes easier for you to read. So coverage has increased. In fact, some students might wonder that, sir, when we take a regular or a exam oriented batch, they say how many hours you're taking. So number of hours, for example, regular batch went to 270 hours, and the exam oriented itself went to 170. Exam oriented was exactly a fast forward of the regular. In this I have cut down the question. Exam oriented I generally do not cut down the question, but I realized while recording those classes that course has actually increased for you. Course has increased. There are two reasons for it. Till 2020 the pattern of the questions was very different. After that the pattern of the question itself has changed. Even if I do everything, still I do not know, there will be possibility 10-15% new will come. Above that new thing coming, there could be possibility wrong will come or right will come. That also not, certainty is not there. So my way of doing examination is, I'm saying very clearly, please, it's whatever are the chapter which I can know that area of a mistake is very less. Valuation, for example, I tell you, if you have mutual fund, I'll just tell you the chapters which can help you score. Now since pattern has changed, I don't know 30 marks. Otherwise, mutual fund, security valuation, mutual fund, security valuation, excluding bond, I am saying M&A plus business valuation. If your luck works well, you might find the questions coming up to 30 marks out of these three topics only. That's a huge weightage. Earlier it was maybe sometime up to 40 also. And then you can read in combo. When you're reading at home, mutual fund, security valuation, M&A, forex and derivatives combined, do it please. Forex and derivatives. This is one combo. And then you can have now portfolio management plus the capital busting. This can become another combo. This is how you'll be doing it. Try not to leave any topic, because reason being, you do not know if by chance normal question also comes and 10 marks case study also come. It could be a 20 marks. So do not leave. Portfolio is purely a formula based chapter. Purely a formula based chapter. The forex is most logical chapter, and in fact if you ask me, derivative is the simplest of the chapter. The way trend has been there till now, it has to be the simplest. Remember what I told you, only call and put, nothing else. After that you keep identifying plus minus plus minus plus minus, that's it. That could be there. So this has to be one of the simplest chapter, unless and until they complicate the scenarios. So mutual fund security valuation, this is one. This could help you scoring. This is two, and this is third combo. Rest would be smaller. For example, in risk management, they have made the new questions in a couple of attempts. Now there could be possibility that they'll repeat same thing. So length can increase, etc. Because they also keep trying something new. They know students could have done this practice. For you, the work has increased. For the subsequent batches, the work will keep increasing. It does not mean that old will go. When they introduced new, there was nothing old has been removed. It's only addition which has come. So do it nicely. Since you have ample time in hand, try to give the test paper. Also on the test paper, one I gave it to you. Rest I've asked them to make it. They would have made it. So again, I'll prepare one, the column as test paper, and that if you want, you can give it independently. But test yourself before doing. And ambiguity would be there. Mistakes would be there in the examination. Means paper, you cannot expect a foolproof examination. It's a very rare, because it's happening on such a vast scale. There could be a possibility of error. Actually, when a teacher is making paper, I think that they should, when the examination are making paper, they should take it twice or thrice. But still, you can make sure, you can be of the assumption that there will be a mistake either in the accountancy paper or R paper or audit or etc. So you have to ignore it, especially ignore any voices. After the exam, whatever you want to do it. While in the exam, once you have given the paper, then please do not try to judge yourself. I have done nicely or not. I'll score how many marks, because 100% I can give in writing. You do not know how many marks you'll score. No matter how much you try, you will never know how much marks you score. If the paper level is considered as a tough, automatically, beyond your surprise, you'll come to know you are not expecting 40, you'll score 60. There could be a possibility. So leave everything to it, because sometime what happens, we become judgmental. My FR paper went bad, I might not go for the second and third paper. That would be disaster. Attempt is anyhow gone. Do not try to play with it, please. Give all the paper and then leave it, and pray paper comes on the tougher side. Easier side, it's easy to make a mistake. Tougher side, even if you attempt 70, 80% or 90%, scoring 60% becomes easier. So anyhow, rest is, you know how to do it. I am not giving any kind of a dictation here, because a lot of teachers would be there, will be guiding you, how to write exam, etc. Now, no matter what I say, it's your emotional level which determines how you attempt the paper. It's very difficult. I can say in the exam, be confident, try yourself. You never know, when you start from home, anything will happen with the auto rickshaw says, Bhaiya chaloge, he says no. Chaloge kya nahi chaloge, he says no. And you become angry, and by the time you reach the hall, these things are very bad. So you do not know what will happen on that day. So that day is very important. It's sad that someone is going to play a match, and maybe while going, something comes in the mind, and the mind starts thinking that way. So it's more of testing of your patience level, the emotional control. Try during the exam. That's only thing I can say. There could be possibility something might happen which can trouble you. There could be some events which can disturb you. Anything can happen. Maybe it could be possibility you invested in equity market and market fallen down. Then when you go for, there could be anything which can happen. You never know what. I cannot tell you n number of sequence can happen, because these phones are there na. If I go back 15 years back my time, or 20 years back, I don't know, 20 years, yes, almost 15-20 years back, if I go, so no phone, no television, etc. I remember in exam, one of the exam I went, and suddenly everyone, because in exam it happens what? They open up the register, this topic you've seen, this topic you've seen. I never had the habit of taking any kind of a book or bag. One pencil box, that to be a pencil box also, that tin box used to come that time. And I went, what happened? This topic, accounting standard you've seen? And I wonder, which accounting standard is this? Which actually I did not know. I'm telling you very frankly. That was 2004 or 5 or 6, I don't know which year. I thought, yeah, gone. Next time we'll have to come back. By chance in exam came accounting standard 3, cash flow statement. And I was teaching that time 12th class and BCom. Look at the luck also. That only came. Everyone came. Direct method came, indirect method came. And I said, what came? I know how to do it. I did the same way. Means sometime it happens. And that happens in any time in my life. I have only taken pressure in CA final once. And the subject which I took the pressure, I scored the lowest. Means lowest number I scored. Whichever paper I bent, without fear, I was able to score marks. There was one paper, IT paper used to happen my time. I did not know computer. I brought the computer also at home. modem, but you can, nowadays you don't have that paper na. Nowadays our time used to happen system, that time they were laptop was not there, this kind of a box was there, ram, I used to see which one is, where is he, and they used to see connect this way, and plus English language, and that I scored, I think maybe 50s or 55 or 45, I don't even remember, somehow passed MICS used to paper. That paper I know, I, because from mind only I knew I do not know this. Accounts, when I went, I knew that since I was teaching accounts for a long time, taxation, for example, if I felt whichever subject I felt over the period of time na, was weaker on the in the C inter final, I was teaching that time. So that one time in the direct tax happened. There was some tonnage tax, I think, or don't know what kind of tax which came in new that time. I was teaching some college students that time, and one of the best known colleges in Delhi. The same question came in the exam. So luck plays a very important role. It's not that I had prepared it. Maybe I was putting in effort from a different perspective, but on the subject only. Exactly same thing. What I'm telling you is, when you are studying, if some friend is there, friend is only one or two, if he or she is there, you are helping them out with the topic, then make sure that you are nicely helping them out. Somehow you come to know that this topic is, I have a weak hand and I learn that. So basically, over a period of time, when you're teaching or training someone, you learn that subject automatically. But make sure do not spend my time, because I started teaching very young age, so I was teacher also, I was studying also. So cumulatively, it helped me both ways. Income tax also over the period of a time, DT also. But that time, BCom was not very tough, or maybe my main subject was accountancy that time. So FM I started teaching later on. But the objective is, when I went to the exam, I realized that somehow your basic skills are prepared when you're teaching. Exactly same thing when you do the office work, for example, some audit you are doing. If you're doing audit nicely, automatically that will recollect back, provided that kind of a procedure comes in the exam, which we do not know that procedure will come or not. Same thing, you would have done some taxation in the office, and that comes, it will be helping hand. But certainly during the exam hall outside, do not do, oh, this way, that way, etc. How will we do it? How should we done it? That creates a problem. So be careful when you do it, please. So over the period of a time, when you move after becoming CE also, make a habit, at least pick up a subject on which you can speak. That gives you confidence of talking also, that gives you confidence of a learning exercise, and that makes your skills develop. Because you, anyhow, what I see you every day, or students, they read a lot, but after coming into the practice, after coming in the practical life, you somehow detach yourself, because you are too engaged with the practical scenario. But make sure, out of these many subjects what you've studied, pick up one subject which you can carry for a long time, at least in which you can speak. At least for the self confidence level, it is important. It's not necessary that you have to become a teacher, it's not necessary, but at least you can have seminars, you can be a speaker. That will give you confidence, that will help you building your network also, and that will help you realize the potential what you've learnt in theory. Because when you study and when you teach, there is a huge difference which comes over a period of a time. So make sure after finishing of CA, you select one of the subjects in which you can do the mastery. But before that, when you go for the exam, do not take any kind of a pressure, please. The moment you will take a pressure, it's difficult for me to say you do not take a pressure. It automatically comes. Reason being, because mind tells you only 10% will pass. What will happen? How will I get the job? Will I get married or not, etc.? What will my parents think? That pressure automatically builds up. It's not in your hand. Now the students who are able to take that kind of pressure, that is, they sail through. Second is, do not remember your past at all, please. Do not remember, was a failure, or I was a bright student, or I was not a bright student. Every attempt is a fresh and the first attempt for you. That's it. And this time it could be the best one out, because everyone is sailing in the same boat. Everyone is in the same boat. So there could be possibility even the institute has that pressure, new course coming in, structuring, making papers. So they'll take care of it. Just imagine that they will take care of you. That's it. So I wish you all the luck, and take care. Bye bye. I tried my level best, whatever best I could have done. I tried my level best to cover it. Maybe the speed could have been slower. We have taken 3 hour classes, but that was the could have been possible, because a full day if I would have taken, your and my energy both would have drained out in the same day. Thank you and take care. Bye bye. Thank you. Take care and bye bye.